Hello and welcome to the ILC Home and Property webinar. I'm Alan Soutar, I'm the chair of ILC Home and Commercial. And today we're going to introduce some emergency talks, webinars and podcasts on what seems to be the emerging building material supplies panic. Panic may or may not be the right word, but there's certainly an emergency going on, and what its impact is going to be on the insurance repair work. First though, a big thanks. All of these things can be brought to you free, and that's a big thanks to our corporate partners, CoreLogic, Carpenters, Innovation Group, iCab, SafeLine, Sitecall and Synergy. So big thanks to them. That helps us provide the sort of information and discussions that we hope help the industry. And that's after all what we're here for. This actually was recorded before we broadcast it. So live questions won't be very relevant, but if you do have any questions, thoughts or ideas, it's always good to hear from you, so please just drop me a note at alan@iloveclaims.com and we'll answer you as best as we can. So where are we? We're in a space where over the last couple of weeks we've increasingly seen some scary headlines, I think, on building material supplies and costs. We've seen an effect of rationing to some extent. We've seen costs, especially on a lot of specialist materials, but on general materials as well. We've seen lead-in times increase, and we've seen advice from some merchants that you've got to plan well in advance. And that can be challenging for some of the insurance work that we've got, apart from the fact of how do we make sure that everybody is still around and able to do the work that is required by policyholders. So we've seen price increases, we've seen availability challenges, we've seen restricting supplies of cement and other materials, say longer lead-in times, order in advance, and we hear that some of that's down to unprecedented demand, which, if it is, must have a roll-on to resource and trades as well. So there are significant immediate impacts on the property repair market and that all of these aspects really. So in the first of this emergency webinar series, we've got four people whose fingers on the pulse for each of their areas. So welcome to Martin Bull, who's the procurement director of Buildbase group of companies, James Bowen of Xactware pricing solutions, old friends Peter Wassell of Sedgwick, and of course Steve Gelder of the Gelder group. Welcome to everybody. It's tough times, Steve, so I'm going to start with you at the real end. What's happening? What's happening to you as a contractor with the building supplies issues?
Well, we're seeing unprecedented cost increases on pretty much every material. I mean, last few weeks, I've set up a little email group, and I've started emailing them out to the likes of Peter and James, and we're just passing on the price increases where notifications receiving from the likes of Buildbase, but just pretty much everything is double-digit numbers. Delivery times have moved out, and so from a builder's point of view, you have it in your head. You know, if you need a few bags of cement, you've got to give 48 hours notice. You know, you need some concrete, you really got to be giving 72 hours notice for the plant. You need a new garage door, you're kind of looking at 3 to 4 weeks. Suddenly, all that is out the window. So when you come to do a job, you know, your garage doors are taking 3 or 4 months to get hold of. Your concrete is on 10 to 12 days delivery. Cement, you're ringing up and they say, oh, no chance any this week, mate. That sort of stuff. So, and it all has a knock on. So that's creating inefficiencies for our workforce. And then, of course, we have to stomach these price increases, which there's nothing we can do about it. It's market driven. And unfortunately, the price is just going to go up. And that's where we are, really. You're on mute, Alan.
I do that to make you all feel comfortable. Okay, Martin, what's behind this? What are the root causes to this? Because from discussions you and I have had, it's not just singular, as some people have said. There are quite a few reasons behind this.
I'll mute myself. Yeah, I've sort of grouped it under 5 main headings, really. So the first one being obvious is COVID. So you've got a direct impact of COVID where you may have a manufacturer where they've had to change processes, shift changes become slower because they have to clean down equipment, they can't ship. And and all this has a knock-on effect to their ability to produce and reduces their capacity. You've got an indirect effect of COVID where it feeds into the other stuff I'll touch on, because there is an impact on COVID. And obviously, a second ago, I didn't even include the fact that what people may be short members of their team as they're off sick, either with COVID or self-isolating. Then we've had delays at ports in the UK, both delays of getting goods through the ports or shipping delays of actually the ships making their way to the UK. For us, we've seen that result in certain products having been diverted to mainland Europe and having to be unloaded in Europe and driven over, which obviously extends the lead time. Hauliers, UK hauliers are an issue. So if you went back sort of, can't remember now, 6-8 weeks, that wasn't a problem. Then we've seen the reopening of non-essential retail, the reopening of hospitality, and that finite number of vehicles and drivers, that already stretched supply chain gets stretched further. Then you've got raw material shortages and an increasing cost of raw materials, which then has a knock-on effect on manufacturers' ability to produce products. So you take a product like PIR, the main raw material being MDI, that's been in short supply since sort of October, November last year. We've had product allocation for that period of time with no clear end. And then you have got that increased demand. The market is strong. And actually, you've also got to consider global demand, especially when you look at a product like timber, where that's very well publicised, that the US are booming. They're really trying to drive construction. And you take a commodity like timber that is traded globally, and material that would have previously come to the UK, some of it is now being diverted to America. So you factor all those in, and it gets us to where we are now. But I guess the one thing I always like to stress is all product. I can't sit here now and think of any specific examples where product isn't available. It's just that longer lead time, and obviously the cost inflation that Steve spoke about.
Okay, thanks, Martin. I think that's an excellent explanation to it, because often people look for one reason and take comfort from that one reason that it'll get better, but 5 main headlines with sub-reasons underneath it sort of send a signal to me, James, that a variable prices increases are going to go on for some time. What impact is it having on the way you're being able to update your rates?
So just picking up on what Martin said earlier, I think for us and probably Peter and everyone else in the group, this isn't something new. This has been going on since the summer of 2020, starting with the plasterboard crisis, shall we call it. I can see it going on for a little bit longer. You've got a couple of other things on top of what Martin mentioned there with regards to port congestion and things like that. The cost of freight, moving freight, has gone up threefold in the last month, and shippers are dubious to invest in new shipping because, as we probably see back in 2001 and 2015, they build all these great ships based on the booms, but it takes so long to build a ship that the boom is gone by the time it's built, and they're having to beach them somewhere and then scrap them. So they're very nervous, and I don't see any investment coming that side either. I could see this going on for the rest of the year without a doubt. But as Martin said, the materials are there. It's the availability, isn't it? When we're doing the research, we can tell you a price, but we can't actually let you know what the availability of that material is. As you know, our research cycles are every 3 months, so our material prices are as up to date as they can be on that cycle. The guys tend to, in my research team, research their materials in the last 6 weeks of each quarter. We're actually working on masonry, brickwork, aggregate right now. So we're hoping that in July that we'll have as good a price as we can get at the time. But we're having to think about maybe being more agile as well. Is it perhaps time to increase the frequency of our releases? That's something that we're talking about within the team. A lot of our customers are coming to us saying, what's going on in the market? We're showing them the research we do and giving them the confidence. It is an exciting time, I'd almost argue, though, as you mentioned earlier, because the world of pricing can sometimes not be the most exciting world. So, watch this space, and rest assured to all our customers anyway that we've got our finger on the pulse, and we'll make sure that, the fairest price we can get is out there.
Yeah, I'm not sure the contractors are exciting, the word I use, are finding it that way. but you have a fair point. Peter, again, we talk from a different position here, and in the position that Sedgwick and other businesses like it are, you've got to balance demand, supply, and if margins are tight in the industry, and we know they are, and we know that the methods of procurement have tended to focus on unit prices over the years and keep them down. How difficult is it now becoming, given the speed of movement? So, as James said, you used to be able to look back 3 months, but in the current environment, 3 months is probably quite a long way. How do you keep up with these changes in demand, changes in supply, changes in prices, and changes in availability to balance between what your customers want and what the actual contractors are going to be able to provide?
Yeah, I think, as James said, it's all about research and knowledge. I'm not sure I'm quite as excited as James at the moment, but it's very useful for us to have people like Steve feeding into us to show us what's happening for them, and we get that from all of the contractors on our network, so we can see what's going on. So we track inflation. And at the start of the year, we advised our clients that we thought inflation this year would be in the region possibly of up to 7%, which obviously is significantly higher than we've seen over the last decade or so. The issue about reaction, I think, is really difficult at the moment, Alan, because we've got clients where we're working with them on savings initiatives. They've been looking to cut costs. So it's going to be a very difficult time, because the conversations we'll be having are around, there's an inevitability here that rates, are going to have to increase. It's not that unusual, because in construction, if you have very long-term projects, there are mechanisms that help a contractor overcome inflation, things like the PAFI indices, where you can apply those. So what we're looking to do is to build some of that into our model, so we can feed that back to clients and then help contractors continue to complete repairs as quickly as possible. I'm very concerned about where we'll be with SLAs. We have one client, for example, that requires us to complete works within 60 days. That could become very, very difficult.
And of course, it is ever changing. And Steve, and Peter said they're listening to it right at the front end, which is where you are. There are a few things to say. The building supplies should not be dealt with in isolation, because it must therefore also go on to your capacity to provide the work and the tradesmen to do the work. There's significant infrastructure investment coming from, we talked about USA, coming from our own government to try and get the economy kick-starting again. In fact, actually, I think you mentioned before that was in place before COVID-19 came. So there's going to be a lot of competition for tradesmen and for supplies. So the issue isn't going to go away. How do you cope with this and continue to be able to operate in the insurance market where, perhaps the rates are tighter than they are in some of the other areas contractors operate in?
Well, fortunately or unfortunately, our logo is everything in construction. So we do a bit of house building, we do hospital extensions, school extensions, do an awful lot of maintenance for lots of blue chip companies, and we do a lot of insurance work. So we're always in the good market, but we've always got a foot in the bad market as well. So it's a little bit difficult because we have to move the resources around, but it's kind of what's kept us going for 33 years. But so it's a balancing act, but the insurance is becoming it's like a daily conversation of we've got on our order book is sat just less than 4 million on the insurance book of work pending at the moment, and the reality is we need another 400,000 quid to probably get that over the line because of the price increases. And when we look at the data, I seem to be having this conversation daily at the moment, but the data to me is a bit like driving your car in the rear view mirror, if you know what I mean. I know that the CLC are saying that the increases from January to June, that's Construction Leadership Council was saying it's 5.4% in that period. But I would suggest that from the 1st of June to the end of September, say, it's up another 10 or 12%. I mean, I've been forwarding the likes of Peter and James these price increases. I mean, Everbuild yesterday, this is their 4th price increases. I didn't send this to you, Martin, but wood adhesive, this is the 4th increase this year, and wood adhesives up 40%, decorator filler 20%, and PVA 52%. I mean, these are, I've never seen increases like that. So the data will show one thing, and the other thing I've been having a few conversations is the data showing that labour rates haven't moved much up to the 1st of June, because that's when the kind of data runs out. And I would agree, but literally throughout June, I've never known, I say never known, I've been around a long time, but we lost a plasterer this morning. He's on an hourly rate. He got £5 an hour increase, and it's like, well, we can't compete with that. He was on our insurance team, and I think that's the 6th guy from insurance. Now, we can move them to other areas of the company, but then it makes it even more difficult at Gelder, because they all want to go and build houses at the minute because it's booming. But it's just an impossible situation in the insurance side of the business, I feel, at the moment. Not impossible that we're not having these conversations, but it's just the speed that it's just ramped up over the last month. I know it's been going on for a while, but it's kind of got really serious over the last few weeks. So I think
we're all talking James, we're all talking very calmly about this. But when I listen to the replies you've all given, it's not going to be a calm time, is it? Let's be honest. And if what we're finding is that we're having to go right to the front end to find out what's happening, and the stuff that you do, James, reflects all of that, and what you look at, taking into account all the labour and supply issues. Are we going to really struggle to get insurance repair work done? Because I'm not quite sure what the full impact of this is going to be on the supply chain. From an Xactware side, to provide a lot of guidance and pricing to a lot of the supply chain, do you foresee some capacity issues for the insurance industry?
Yes, because of more to do with the competition, as Steve just mentioned, from new build projects where guys could be offered more money. I think it's important that insurance companies recognise that they're not just in competition with each other when it comes to resources, but they're in competition with a larger network. There's also sort of massive government initiatives that take a lot of men sometimes. So one of the things we saw was way back when Terminal 5 was going up, the most expensive electrician in the country was in the southeast. It wasn't London, it wasn't any other area, because anyone that could pull a wire basically was at Heathrow. So recognising that competition is important. A lot of our customers actually recognise the work that we do as well, and have confidence in us keeping up with those changes. It's a difficult time. It's a difficult time. I think one of the things that they also need to recognise is that they can't rest on rates that are perhaps maybe 6 months old, 12 months old. A lot of companies will sit on rates that were produced maybe last year, if not older. And they need to recognise the work that we do, with the work that Peter does for his networks, and actually understand that, you know, there may not, particularly from our side, there's no incentive for the prices to be high or low. We're neutral. We just report the market. And what we want our customers to understand is, if we're pushing out these prices and saying, hey guys, you know, timber's gone up 8% in Q1, it's going up another 7 to 12% in Q2. This is all stacking up. This is now hitting 15%. You're still sat on a price list from summer 2020 that you were quite happy with, because you think, wow, you know, we're up to date again. Well, you've just missed all of that price movement. I think the classic from the summer of last year was plasterboard prices increasing 40%, customers changing their pricing, then us recognising that that price had dropped again, releasing a new price list with lower plasterboard prices. Customers can take our rates and do what they want. They can either pitch them higher or lower. We kind of pitch ourselves as a benchmark in the sand. And as long as they peg themselves to our data, they're very happy to let us just run with it. I think that would probably be the hardest piece to recognise, is that, like I said, the competition isn't just other insurers, it's many, many other people within the construction industry.
Okay, let's look at Peter. Let's try and balance this. Peter's somebody who's had to also bridge that gap, as we said earlier, between what insurers are looking for and what contractors require. But the demand is changing, and the ability to get an insurer. Let's go back to the background again. We say repeatedly we're in a price-driven market. The margins are very, very tight. Looking at the indemnity spend is really, really important. How do we go to an insurer with data that has to be, I don't know, it's more difficult because it has to be more up to date, and say, look, if we don't make a movement, we may have capacity issues. It's convincing insurers, understandably, given the market conditions of insurance, convincing an insurer that rates have to go up is not a straightforward matter. But how do we get them to be looking at this regularly, Peter?
I think it comes back to that point about information and knowledge. I mean, I think James made some really, really good points there about the market as a whole. We're hearing a lot about that point that Steve was making about contractors losing labour now to other sectors. When I walking the dogs around where I live, Alan, the number of people that have got to skip on their drive, that have got some building work being done now because they've got free cash, because they didn't have their expensive holidays, shows the market is very, very busy. In times like this, if we want to be able to get repairs done to meet the needs of people who've suffered, a loss at their home, and those can be terrible events, can't they? Fires, things like that. We need to get them done. Then insurers have to understand if the market is causing prices to go up, the only way we can respond to that is mirroring that in some way. And we're not saying that this level of pricing is here to stay. I think as we track it over the next few months, we'll see it fall. We've got a short-term blip that we need to manage. It's in a way, it's a bit like a surge, isn't it? We've got an industry surge that collectively we need to manage, and that's what we're very good at. So I think it's about sharing with insurers all of the information we've got, explaining to them what's really going on and the impacts for contractors. And I'm sure they'll understand. We had our bathrooms refurbished earlier in the year, and we had some difficulties because the guy who was doing the work couldn't get hold of just certain of the fittings that we wanted. So the job had to be delayed. Now, I'm a quantity surveyor. I priced out what I thought that job was going to be, and I was completely wrong. And I went through with him where the invoices were, etc. He gave me the information. I understood then the fact that he couldn't do it at the cost I thought, and he couldn't do it when I thought he could do it because he couldn't get the materials. When I understood that, I was fine with that, and he did a great job. And I think that's what we need to put over to insurers about. It's understanding, recognising the difficulties the industry has at the moment. And if we want to get repairs done, there has to be a reasonable response.
Okay. Yeah, I think that's very fair. On this, don't you, Martin, Peter talked there about, is it short term? From some of the discussions I've had, we don't really know what parts of it are going to be short term. And if we look back at your examples of a plasterboard, then one of the things that we do know is that it can change. So do you foresee, looking at some of the issues that you gave us, that the variability in pricing is going to be here for some considerable time? Short
answer, yes. Talking to suppliers, they don't have a crystal ball, but there are certain, and I'm mindful of not getting too specific because whatever I tell you now will be out of date by the time this goes out anyway. But yeah, you look at timber pricing, you look at timber availability, that's carried on pretty much since we came out of lockdown, very much sort of Q2, Q3 last year. I've touched on PIR. We have the same issues of continued inflation. We've had products where we've taken a cost increase earlier in the year. I've spoken to suppliers and said, have you got any issues? No, we've got product locked in from their suppliers of raw material. Speak to them a week later, and they've been let down by their supplier. So yeah, I think this is going to be around for us for a little bit longer, well, for an undefined period of time. But I can't give you a definitive because I don't know. And like I say, if I give you an answer now, it'll have changed probably by the end of this call in some instances.
Yeah, and I think that's telling in itself, Steve. So let's go back to the front end as a provider. Peter's quite right. We have to convince everybody all the way down the line about what we need to do to make things viable. But that's not normally a very speedy process. It has to be understood by the people you're talking to, and they have to then do a little bit of convincing, presumably above them. Let's not talk just about Gelder, but from the broader look of a contractor, what problems does this give you? And is it a matter of eventually saying, look, until we get this resolved, we're not going to be able to do the work because it's going to become loss-making? We've talked about increases up to 50%. We've talked about not being able to do work on a regular basis because you can't get all the supplies to site at the right time to have a proactive and economic building program. So in reality, let's send a message across now. Where are we with this? What kind of emergency situation is this for those that are doing the work?
Well, I mean, a lot of people know me in the industry. I get emails daily, phone calls daily. What are we doing about it? This is what we're doing about it. We can't have a market where a good day for insurers is a bad day for their supply chain. We need to work with the supportive clients and, quite frankly, kind of abandon the rest because we want to be in business in 6 months' time. So there's a saying that you'll have heard me say that's like, let's just deal in fact. I can give you the facts. So if we're buying stuff off Buildbase and it's gone up 10%, that's what it's gone up 10%. But I struggle a little bit with some of the rates. I don't know how they're all made up. I know the Xactware one. I'm not sure about the Sedgwick one, but where you can drill into a rate and say, this is the rate for the labour, this is the rate for the materials. I think there needs to be quite a lot of transparency around that. So if the cement is in at £3 a bag and we're paying £5 a bag, it needs to go up. But it just needs to be, a conversation, but it needs to happen quickly. And I don't actually think that any of the contractors that I'm speaking to are going to accept it going along on for indefinitely. It's kind of, we need to bring it to a head within the next few weeks, because we can't just be going out there and doing jobs to lose money. We all want to get up in the morning and do a great job, have happy clients, everyone patting us on the back. And it's so hard at the moment because people are disappointed with lead times. And like Peter said, they've got clients, you've got to complete all the jobs in 60 days. Well, that's fine, unless they want the garage door or a UPVC composite door or some toughened glass, because we just can't get them in inside 8 weeks. But a lot of that can be dealt with by conversations. But what we can't accept is the clients that won't accept that it's going on, if you know what I mean. That's where I am with it. If we have clients that just don't want to engage, talk about it, and adjust things around to make it work for everyone, we really don't want to be working for them. We are inundated with inquiries. Every Monday we have a meeting. It's every department. It's like, it's a case of, well, we haven't got time to price that, but we'd like to do that, but we've agreed to do that. It's great to be busy because we've had 3 to 5 years of Brexit, changing governments, COVID. So I'm loving the fact that we're busy and we're in demand, but we've got to balance that off. That we have to actually make some money when we do these things. It's complicated, but we just need to make sure these conversations are going about and we get some action behind that.
Yeah, and I think there's no question, if you look at any economic teaching at all, that those that can't respond to it will suffer capacity issues. James, this does raise the question, excuse me, does that mean that the more fixed rate model that we've all been using for years might now prove to be really unworkable if this sort of fluctuation continues?
it could be a possibility if people don't have the teams or the resources to keep in touch with the market. I know a lot of companies or insurance companies that run their own networks may, literally have a guy who manages and controls the schedule. And I think the current climate is just that it's perhaps too much work for just one or two people. We could possibly see the end of that style. As Steve mentioned, our pricing is very granular and it's agile as well. It's fully flexible. So a lot of our customers know is if, that bag of cement has gone to £5, you can go into our software whilst using it in the project and change it from £3 to £5. Our insurance companies recognise that this can be done, and as long as the user puts in a note, that and a receipt even, that there's no argument. So, I think what people need is flexibility. People need the agility of a schedule that can work for them, that can react to the market, and that they can modify as they see fit.
Okay. Peter, with your vast experience, which tells you Peter's older than the young years that he gives across in his picture, but with the vast experience you've got, how easy would it be to convince insurers to be fluctuating fixed rates on a regular basis?
It's back, Alan, it's back to that simple point about knowledge and information. The point about the market we're in at the moment is, Martin said that he could give us some information about costs now, and by the time this is broadcast, it could be out of date. What we're saying is things are moving very quickly. So if we're going to have that fairness that Steve has asked for, then we'd have to have a scenario where we can be flexible. Going back to that point, Alan, about the fact that, if you have a long-term project anyway, and you might be working on a fluctuations contract, the fluctuations contract would allow you monthly adjustments using the PAFI indices. Really, it's like that. If you've got the knowledge and you understand it, I don't see a difficulty as long as, insurers aren't taken advantage of. I think there's probably a concern that could be happening. I've got a bit of a concern that, some of the increases we're seeing, I'm not entirely convinced all of them are due to, the current situation. I saw one supplier the other day saying that some of his price increases is now due to environmental surcharges because their suppliers are now, looking at carbon neutrality and they're passing that on. I think that we've got to be very careful that, we're not just opening the floodgates to everything. I'm sure that's what insurers would expect me and James to be doing, to be looking to make sure that we are presenting the facts and the information. As Steve said, it's about facts. And when you're presented with facts, you've got to be able to respond if you want your contractors to do the job for you. It's quite simple, really, isn't it? So insurers have to respond to that.
Okay, I'll come back to how insurers respond in a minute. Martin, at the end of the day, I would say that most suppliers of building materials don't really want to be passing on increases because it's making them uncompetitive. They're having to watch how much they pass on realistically, but yet keep an eye on their competitive benchmarking with others. And the environmental issue, I'm not in any way declaring what Peter said, will become an issue. We know that through other areas, and we'll talk about that in the conference. But in reality, do you think this is going to result, I mean, it's maybe unfair to ask you as a supplier, but is this going to result in far more cost plus work because you're just not able to give any comfort to those that are pricing work about what price variability is likely to be?
Hard for me to comment on the cost plus side of things because I sit at that point in the supply chain. What I can say is, as a merchant, and I've worked in similar businesses in the industry, we will be pushing back hard on our suppliers. We don't want to be taking these increases. We need to make sure we're remaining competitive. So this is it's not something that we take lightly, I suppose is the best way to put it. We are pushing back on this, and it's very challenging times. It's no one wants the cost increases, especially not the levels we're seeing, not the level of inflation we're seeing on certain products. The multiple increases on timber, the multiple increases on PIR, the multiple increases on plastics and steel products. So yeah, we will do everything we can to keep those costs as low as we can to make sure we remain competitive and work with our customers.
Okay. Steve, do you think we're going to have to move down a different pricing methodology if this continues? Are we going to have to go down a cost plus type of route? Are rates going to become very, very difficult? James has already said it's going to be challenging to work to. And in our experience, I agree with everything Peter said, but my concern is the speed in which an insurance company is able to move. I'm not talking necessarily about the desire of the people in it, but it's a big organization. Margins are tight. Therefore, it's operational cost and the cost of a claim. Passing through increases makes a huge difference at a very, very high level to the business.
Yeah, I mean, I don't know how long this is going to go on. You would hope that in, say, 3 months' time, it starts to settle down a bit and then you can get back to it. But we have a short-term problem. But it's not just a short-term problem with fixed rates, even on tendered works. And I have copied you into a few things on, look, we picked a spa shop up. I think it's about 780,000 quid. We then had to go back to the market and I've got a new phone. I don't have to turn it off. Then I had to go back to the market and because we couldn't deliver it for the price. So we win the job. It's a great job. We're all celebrating. We go back to our steel suppliers, our stockists of bricks and things like that. And also we can't get these bricks. This steel price is no longer fixed. So then you go back to the market. We renegotiated, which was difficult, getting another 40, 50 grand out of the client. And then we all agreed that on Thursday, Friday last week with our suppliers. We had lots of Zoom calls and everything. And then yesterday morning, they issued the order to us. We went back to the steel price, people who were doing the steel frame. And they said, we've had a price rise between Thursday and today. We can no longer deliver it for this price. It's like, guys, you're joking. This was only on Thursday. And it said, leave it with us. Anyway, we managed to get it over the line yesterday, but that's just the market we're in. Our estimators it's a nightmare pricing a job. The tender price is there, and then there's like this much of qualifications at the end of it, and we can't fix it for 13 weeks. We're trying to fix it for 28 days, except for steel and things that we can't. Like you get the panel products and things like that you just can't do anything. You can't do anything about. So it's just something that seemed, I know it's been going on for a little while, but it just feels like the last couple of weeks it's kind of really come to a head. And, we just have to manage a way through it, but we can't manage a way through it by putting our heads in the sand and pretend it's not happening. We need to have these conversations, deal in fact, I'm sure SPA are very happy that we managed to get this signed up. We placed all the orders, as many as we could yesterday. We're taking deliveries months before we need them and I've never seen as many materials as we've got in our yard, because every job we've got, we're ordering it like on day one and just taking the delivery to make sure we can secure the product and keep it, but that ties capital up. So we've got clients who are including those stocks on our valuation, so we can fund it all and things, but it's kind of a different way of working. But reality is we've got to just have these conversations, work with people, and just get the dialogue going, and do the best we can. And we all want to be here in another 12 months' time, don't we? So that's where I am with it.
James, moving on again a little bit from supplies, are you beginning to see impact now on labour rates as well, given again the investment in infrastructure, the enormous amount of house building that's going on? I mean, I give you infrastructure, I'll give you an example. I live quite near London and I've been having to go back into meetings in the city again recently. I don't know if there's the same in other cities throughout the country. When I walked through the city on Friday, I saw the occasional office worker, but boy, oh boy, did I see construction workers and construction work going on. Now, I don't know whether that's exaggerated because there's no other people to dilute them and they all wear bright jackets, but there seems to be a heck of a lot of work going on. And, you're looking at that and saying, look, this is really going to have an impact on what we do.
So yeah, there's a lot of work going on out there. We for the rates that we're publishing in July, we're actually doing the labour research now. So I can only really talk about the facts from Q1. Q1, there wasn't a massive jump, and I think Steve kind of verified that with his statement earlier. However, we are expecting either in July or over the summer for this to change as markets open. The drivers, Brexit, obviously, will a lot of the guys that left the country during COVID to go home and things like that, will they return? That's a big one. Do we have the skills in this country to fill the gap? I don't think we do. A large proportion of our contractors and operatives are coming to the end of their career. So I think this is all part of this perfect storm that we're talking about today, really. And to answer your question again, I can't answer it. I don't know what's coming, but I think that there will be labour increases, as Steve mentioned, as the competition piece we mentioned earlier, the facts that Peter brought up as well. But rest assured, again, we will be reporting these facts, and that's what it all is at the end of the day. And I think we've all said that word many, many times. It is facts, and people hopefully can start getting their heads around it and react to this new market that's maybe here for the rest of the year, perhaps, if not longer.
Probably the final question, at least today, because we're going to have to follow this up and get more contractors on board, ask a few of the insurers how we're going to deal with this. But back to you, Peter. Quite often in the past, when capacity becomes an issue, or cost becomes an issue, we've seen a slight or heavier shift towards cash settlement. Is that a likelihood, or is that a problem on two fronts? One, they won't have the capacity of the work, no capacity of the work done anyway, and of course, how do you arrive at a fair cost for that in a fluctuating market?
Alan, I think that could start to become a really big issue. So I've heard from some of the adjusters only last week about the difficulties they're now starting to face in discussion with customers around cash settlements. And that's because at the end of the day, the customer still wants to get work done. They want to get it done on their own terms, but they're finding it difficult now to get it done because they can't get tradesmen locally. And that's because of all the demand that's being taken up in there. If they can get somebody, they can't get it done for months. So that's really pushing people to say, what alternatives are there? And of course, that then makes the adjusters challenge harder because he then is finding it difficult to settle for cash. And yes, if we're seeing prices going up for fulfillment works, then cash settlement costs have to rise. The mechanism for it obviously needs to be discussed and agreed with insurers, but to me, the two are inextricably linked. And it's just more of that perfect storm that Jane mentioned. It's not just about the physical repair, it's about construction costs at the end of the day. And of course, insurers are involved in all areas of construction costs, not just when they're involved in the fulfillment.
Okay, thank you. I think one of the things, we will have a podcast in this again within about 10 days to give us an update, guys. This is a very serious issue for the whole industry, and I think hopefully we've highlighted that today. In 10 days' time, we may know a lot more. I'd like to thank everybody for participating. Martin, thank you very much for joining us and really giving us a terrific insight into that. And I'm sure at some point in the near future, we'll get you back again to see what's happening. What it does is it stops a place, it stops us trying to lay blame in a place where it might be easy, but we don't really know. So it's terrific from a Buildbase fact that you can want to explain this to us. Steve, James, and Peter, thanks again. We will be back in contact with you. Everybody listening to this is a really serious situation, whether you're an insurer, whether you're a contractor, whether you're a loss adjuster, whether you are a network manager, whoever you are within this, please, if you have any questions or thoughts or contributions, don't look at the bottom of the screen because this is recorded, so the comment section isn't going to be as valuable, but please let us know on alan@iloveclaims.com. We will revisit this in a podcast and then another webinar. Please keep your eyes open. The headlines are clear if you do your research. And as I always say to people, do your own research. Don't rely on other people and what people tell you. Do your own research. It's It seems to me to be pretty clear in there. Anyway, thank you all for listening. Really appreciate your time, and hopefully we'll see you all again soon.